Hello everyone. We have some news about de-dollarization of oil trade, using gold to completely bypass US dollar. This will have major implications for international trade, reserve currencies and the gold itself. Let's talk. In my previous videos we discussed challenges faced by countries that use US dollars in foreign trade, and, if given a choice, most will use domestic currencies or resources locally available instead. Like local commodities, goods and services. We all seen what strong dollar does to economies. For example, Japanese energy imports, which priced in US dollar, tipped normally positive balance of trade into a record trade deficit, crashing yen in the process. Situation is even more severe in developing nations that have to use dollars to pay for imports, especially oil. On top of that, many of them are saddled with unpayable IMF loans, denominated in US dollars. Up to this point, there was no alternative to US dollar. Energy was priced in US dollars exclusively, and anyone trying to play outside of the US defined box were swiftly invaded by US or neutralized via clandestine means. Think of Iraq and some other countries in Middle East, Venezuela, Iran and others. In 2022, situation is changing. Now we have some big players openly challenging US dominance, and countries, if desperate enough, have new ways to conduct international trade. Newest example is Ghana. This case is worth paying attention to. We have seen US dollar being replaced in cross-border trade using major currencies like yuan, Indian rupee or ruble. Process of de-dollarization in Asia is well underway. But we are talking about paper currencies. Yes, it is a challenge to US dollar as a reserve currency, but in principle, it's just another unbacked government IOU. Ghana might be starting a new trend that will have big implications for reserve currencies around the globe. New government in Ghana working to diversify away from using US dollar to pay for its oil imports, in favor of gold. Using gold would prevent US dollar from directly impacting fuel or utility prices, as domestic sellers would no longer need foreign exchange to import oil products. This is a game changer. Pricing of goods, commodities or services on international market in gold, as opposed to pricing them in dollar, has long-lasting implications for reserve currencies around the globe, specifically US dollar, euro or yen. The barter of gold for oil represents a major structural change. If implemented as planned for the first quarter of 2023, the new policy will fundamentally change our balance of payments and significantly reduce the persistent depreciation of our currency, Ghana's vice president said in an interview with Reuters. Main implications here is a shift away from pricing in US dollar into pricing in gold. It's a completely new way to conduct trade. As I mentioned before, shifting away from current international financial structure dominated by US dollar is not a question of if, it's a question of when. If you are given a choice to print your own money and use it to buy stuff, would you still go through the pain of getting others' money to accomplish the same tasks? Very unlikely. To earn US dollars, you have to produce something or value, find someone who needs it and has dollar available, collect on those sales in US dollars. Lots of moving parts. If you are a country, would it be much easier to print your own IOU and use it to pay for imports, just like US does? Who would say no to such a deal? Don't forget that even after you struggled enough to put away those US dollars, there is a non-zero risk of US seizing those assets, leaving you empty-handed. There is also an inflation risk, given record US budget and trade deficits. US really shot itself in a foot with those sanctions, but it's another topic. Let me know in the comments if you think US had any plan or it was just a dumb policy blunder. I am curious to hear your opinion. My point is that de-dollarization is the most desired outcome for many sovereign buyers. Now the obvious problem for many countries is that not everyone wants their money, like Ghana's currency for example. US dollar is readily traded 24 hours a day around the globe and is very liquid. There is a well-developed environment to store it in US bond market, and it has an easily accessible worldwide infrastructure. Most currencies simply do not offer amenities US dollar does at the moment. Enter gold. With gold, the situation is different. Gold has a very liquid market, with many able and willing buyers and sellers. Given geopolitical situation, many exporters would prefer gold to even US dollars. Latest shopping spree by world central banks is a testament to this. As many of us know, World Gold Council just reported a record 400-ton gold acquisition by an unknown buyer. Well, the buyer is probably very much known. It's either China, Russia or maybe Saudis, but this is beside the point. The point is, gold is in high demand. It offers properties no other sovereign currency possesses. If taken into a physical custody, it's yours. Just like the physical bullion in your hands. It's very private, a great storage of value and it is completely under your control. This can't be said about any sovereign currency. We have heard rumors that BRICS are planning an alternative currency which will be based on a basket of currencies, like IMF's SDR, or based on commodities. News from Ghana highlight the need and interest in making it a reality. Few years back, not every country would have dared to oppose US. Today, Russia is openly looking for a way to get paid for its oil in anything other than US dollars or euro. Do you think if Ghana offered Russia a deal to trade for oil and gold, Russia would say no? I do not think so. Same with Iran, Venezuela, Syria, and maybe even Saudis. Another important aspect. If you are a gold producer, you can bypass entire chain of middlemen that profit and controls gold prices. Some gold-producing countries are complaining about price manipulations by the Western market makers. I have a video on a mechanism of price discovery in LBMA, check it out if you want to be blown away by the setup. It just screams, price rigging. I am not even talking about dilution of gold markets by a deluge of derivatives. But back to the topic of pricing and trading oil for gold. Anything big starts with a first small step. Once everyone sees viability of this trade, many would follow and it might open a floodgate. A first successful trade in gold might be all that is needed to nudge current monopoly of US dollar into a complete collapse. I am not a financial advisor, but the question every one of us should consider. How much 1 ounce of gold will be worth, if gold has become a de facto reserve currency? Let me know in the comments. Please subscribe and thank you for watching. Until next time.